This is Taking Stock on Bloomberg. I'm Pim Fox. Disappointing sales in May led to a slew of retail stocks falling today. Macy's, Costco, Target, all stocks falling. Abercrombie and Fitch, Family Dollar, Nordstrom, and The Gap were the four stocks falling the most in the S&P 500. Are retail stocks overvalued? Well, joining us to figure out what happened today and a look into the retail industry, we have retail expert Patty Edwards, analyst at Storehouse Partners, coming to us from Seattle. Patty Edwards, welcome.
Always a pleasure to be here, Pim.
Patty Edwards, look into the world of retail. Have the stocks run ahead of reality?
You know, so many of these stocks are up 60, 70, 80, 150% off of the bottoms, either in March bottoms or the November bottoms, depending on the company. And most of them have absolutely dismal earnings and even worse sales. They've made up a little bit on the earnings side just because of cost cutting. They have run really far, really fast, and it's hard to get too excited about too many of these stocks at this point.
That doesn't sound like a recipe for retail success. What about the lower-priced retailers? Are they doing better than the mid-scale to the upper end of the retail spectrum?
That's exactly it. Right now, if it is a retailer that can sell something at a discount, they're doing well, mostly. If you look at Ross Stores, at TJX, Aeropostale, which is the bargain basement in a good way for teen retailing, all of them had fabulous numbers for this month and for the previous months. Pretty much everybody else had negative numbers. So even Target, being a discounter, still was not able to get people to buy the discretionary items. They're focusing more on the stuff they have to have, and with that, they're not making their numbers.
Patty, talk a little bit about Kohl's and the Vera Wang collection as an example of how a retailer is trying to keep people in the store, but also getting them to buy.
Yeah, you know, Kohl's is doing a fabulous job, actually. They were down, but it was only 0.4%. So pretty much a flat comp versus last year, which you have to give them credit for. And part of the reason for that is doing things like bringing in Vera Wang, bringing in Dana Buchman, and a few other collections that are exclusive to them. The clothing is fabulous. The Vera Wang is absolutely beautiful. And it was 33% when I walked through the store the other day. 33% off. And I would buy that in a heartbeat if I had the money. The question is, how many of the people have the money? And they've got to be able to get the people in there and convince them that it's a bargain. That's how you do it.
Well, you talk about whether people have the money or not. We've been taking a look at things like personal savings rates. They're going up. Also, we note that credit cards, people have had their credit limits cut. So where is the money going to come from?
Well, that is the problem right now. I think normal is going to be different today and different in the future than it's been historically. The savings rate is up. We're up to about 4% right now. The problem is that still, if you take the average from 2000, we're still at about 1% savings rate for that entire time period. We have been spending our future, basically. And given that, people are going to have to pay off their debts. They're going to have to fund their 401ks more. And we are going to see a consumer that consumes less. They're going to buy the basics, and they're going to spend very, very little on things that are not a basic. They have to, the retailers are going to have to coax us and make it so spectacular and such a value that we're willing to part with the dollars.
All right, we're going to continue the conversation with Patty Edwards. We're going to talk about The Gap, find out if they're doing the right things and whether you should own the stock. And remember, Taking Stock begins each weekday at 3 p.m. Eastern on Bloomberg 1130 a.m. as well as on Bloomberg.com, XM Channel 129 and Sirius Channel 130. That's right, 3 hours of Taking Stock each weekday right here on Bloomberg.
There's a recovery coming, probably, that's what it looks like, but it hasn't happened yet. And the consumer's scared, and home values haven't moved up, and, you know, they're still hurting. And we're going to see that in the numbers, retail numbers, for a while.
That was Meredith Adler coming to us from Barclays Capital. This is Taking Stock. I'm Pim Fox. My guest, Patty Edwards, retail expert, the head of Storehouse Partners. Patty, May same-store sales disappointing today for Macy's, Dillard's, Saks, a number of other stores. Revenue falling more than analysts had estimated. Take a look at The Gap. Are their business plans, are they working better than a lot of the other specialty retailers?
They're starting to. I think they're a little bit further ahead of the curve on making the changes. They started the process a while ago, and the biggest thing that they had to turn around was Old Navy. Old Navy is a huge portion of their business. They've gone in, they've brought in the right designers, they've gotten the fashion right finally. They are rationalizing the store base in terms of not just Old Navy, but also the other stores, making sure that the footprint is the right size, not paying for room they don't need. And they're doing a good job on some of their advertising. For example, one of the big things that drove traffic at Old Navy was a $1 flip-flop sale. Brought a lot of people in, and when you come in, you don't just spend $1 on flip-flops, you also buy other things. And that's exactly what retailers need to be taking a look at doing.
Patty, that brings up the issue of promotions. Are companies promoting away their inventory, and then they're going to be left with very lean shelves that have to be restocked?
Well, you know, the inventory is pretty lean right now. They have been cutting and cutting and cutting what they are bringing in. But interestingly enough, TJ Maxx, who benefits from some of these bigger retailers when they don't have the sales and they have to offload the merchandise, TJX, Ross, they both pick up that merchandise. They're saying they're having no problems getting lots of quality merchandise very close to the time they need it, which means that inventories are still too high for a lot of the big guys.
Let's talk about the merchandising at one of the companies that you like. This is The Buckle. Do they have a merchandising plan that really flies in the face of most retailers' operations?
They do. You know, one of the cool things about The Buckle is it's not just men, it's not just women, it's both. It's still a specialty store, so you don't have the big, huge department store. They have some merchandise, quite a bit of merchandise that is their own, that you can only get there, but then they'll bring in things that are very distinct and yet not their own brands, so that you can go in there and you can buy what you need, what you want, without having to travel a lot of different places. It's really resonating as it goes across the country. Their same-store comps, they were up 13%. They've grown their earnings over 30% for the past 2 years. We think it's going to be over 20% this year. Fabulous company, fabulous concept, lots of room for growth.
What about the concept of premium denim? That seems to be part of the Buckle's strategy, and it seems as though people are still paying for that premium denim.
They are. You know, I think that we're seeing a little bit of shying away from the $250 pair of jeans, but anything, in my mind, over $50, but in retailers' minds, over $100 is still premium denim. And people are still buying that. They feel like if they can't go out and buy the cocktail dress, they can't go on the big vacation, a little pair of jeans for only $150 is really nothing, and it makes them feel better.
$150 for a pair of jeans. Will we find that at Walmart? And is Walmart a pick of yours right now?
Walmart is a pick of mine, and no, you won't find jeans for that price at Walmart. They're actually a lot less at Walmart. They are doing phenomenal things on the merchandising side of things, though. They just signed a deal yesterday with Miley Cyrus and Max Azaria for a new clothing line for her. They have Taylor Swift. They're really making a big imprint in the younger teens and tweens area, where there's not as much competition, especially on the tween side of things. They've also upped their game in their home department. They've gotten their messaging right as far as their advertising, and they're promoting the value but not giving up the fashion, especially in the clothing side of things. It's really resonating. The stores are cleaner, and they've really done a fabulous job of turning things around. If the consumer continues to hurt the way the consumer is going to continue to hurt, they're going to shop down as much as they can. If the experience is right, they'll buy, and Walmart's a buy for that reason.
Patty, turn your attention to an element of the Walmart strategy that has to do with Sam's Club, and also connect that, if you can, to what's going on at Costco, membership fees. Are you seeing weakness in membership fee payments?
Well, Sam's has been seeing weakness in membership payment. Costco has not really seen any dents yet. The numbers have been pretty rough out of Costco recently, and Sam's when they report them, but of course they didn't today. There are issues with foreign exchange in both cases. Sam's, however, reports their comps without the gasoline in them. Costco includes it. So part of the reason that Costco's comps look so hard right now is because gas is off roughly 39%, I believe it is, since last year, and it's about 12 to 15% of their sales. When you have a price drop of that amount on that much of your sales, it's going to make your comps look rough.
All right, I want to thank you very much. Nothing rough about your presentation. Thank you very much, Patty Edwards, coming to us from Storehouse Partners.